You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again. All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. We missed you guys last week. You know, we were off for the holiday week and a little bit of travel going on there, so we owe you a week of volatility. So I thought we'd come back strong with an extra special, extra fun episode for you guys this week. And joining me to help me hold down the volatility fort here this week, my cohort, my partner in crime, good old Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Greasy Meatball, welcome back to Volatility Views. Did you miss talking volatility last week, sir? I know I did.
I absolutely did. I was just absolutely flummoxed that we missed an entire week of volatility. It made me want to cry, actually.
It's kind of funny. And then you look at the numbers, and it seems like we never went away because almost everything is unched from where it was the last time we did a show 2 weeks ago, which is kind of funny. But, you know, there's a lot going on in the world of volatility right now. So we thought, you know, how long have you and I, Mark, talked about on this show about the prospect of new products on the horizon for volatility, right? It seems like a constant drumbeat, We're always talking about it. We don't really see them in the marketplace too often.
We've basically been doing a show primarily about a monopoly for the last 8 years, and we're like a lost puppy in the woods,
Yes.
looking for our owner
Well, that is it.
All we keep finding is the same old stick.
Yes, well, that's an interesting analogy. But yeah, it has been an interesting sojourn in the world of volatility as new products have attempted to come in. And now I'm happy to say that there are some new players in the space. So let's get right to it with our brand new spanking new and fun Volatility Viewpoint segment.
It's time to welcome thought leaders from throughout the volatility trading world. It's time for Volatility Viewpoint.
All right, everybody, welcome to the Vol Viewpoint. This is where we welcome on guests from throughout the world of volatility, proceed to pick their brains for the benefit of you, the listener. And today's episode, a little bit different. Like we mentioned, you may have heard a little bit different intro there at the top of the show because the volatility landscape has changed. There is a new player. We've hinted at it on the show. They've come on to talk about it in the past, but now it's real. Now it's a big boy. Now it's live and out there in the wild. Of course, I'm talking about Spikes. And so we've added a new MIAX/Spikes coach host seat here on the show going forward to help give us some interesting new perspectives in the world of volatility. So I'm pleased to welcome on our old friend Shelly Brown, the Executive Vice President over there at MIAX, as well as Joe Braccho. He's the Senior Vice President and Head of Sales over there at MIAX, doing a little bit of double duty today. Gentlemen, welcome to the Volatility Views program for the start of this fun new era in volatility, shall we say.
Thank you so much, Mark. Glad to be here.
Yeah, hi, Mark, and thanks for having us.
Well, first off, let me congratulate you guys because you have done something that very few people have, which is actually managed to launch a product in the volatility world. We get approached all the time by people and have been so for years. We got a new product. You can count on one hand how many of those actually make it to market. So congratulations first on finally getting the baby out the door. How proud are you guys over there?
Oh, we're very proud. It was a real effort by the entire team here. We really have to thank Simon Ho and the folks at T3 for bringing us the product, and we're very excited about having it listed.
So yeah, it is listed. It is official. Last time we talked to you guys, it was still kind of in the ether there, waiting for approval. A lot obviously got delayed with the whole government shutdown back there in December into January. That delayed a lot of things, including new product approvals in the options space. I know we touched on it in the past, Shelly, but since it's official now, it's a big boy. Why don't you go ahead, give maybe some of our new listeners or maybe people who haven't been paying attention to the vol space for the past few months. First off, shame on them. But then secondly, give them a quick overview of what the heck is Spikes and why you wanted to bring this thing to market.
Sure. So Spikes is an index that was created by an index firm out of Australia by the name of T3. The initial Spikes listing was going to be done as a joint venture between T3 and BATS back in 2016. With the BATS merger with SIBO, the product was dropped, and the folks from T3 came to us in late 17, and we've been working for the last 18 months on bringing the product to market. It is very similar to VIX in many ways, but at the same time, we believe it has improvements over the VIX methodology. And with all due respect to SIBO, we think they have a great product. They've done a great job creating volatility as an asset class. And we're excited about both competing against them and hopefully growing the pie for both exchanges. The primary differences between the two products, the Spikes uses the options on the SPY ETF as their inputs, rather than the proprietary SPX that trades on CBOE. We think that adds some both depth and a better product because being multi-listed, there's no single point of failure. If SPY were to stop trading at MIAX or any other given exchange, it's still being quoted in the other, as of today, 15 exchanges. The other differences are the way we pick the input price for the cash value. We use something called price dragging. It's a proprietary process that the T3 folks came up with that actually uses the last trade price in each individual SPY option as opposed to the midpoint of the bid-ask spread. We also made some enhancements to the way the settlement is done in the auctions here on MIAX. A lot of these things were decided and really designed well before the issues early last year in VIX around the February sell-off. things that we think are improvements to the way the product settles. It was just an interesting turn of events, the way things had traded through early 2018 and then the sell-off in late 18, that we were able to see through the actual pricing some of the improvements that the spikes bring to the market. We think it's really exciting for the entire marketplace to have competition in the space. We've also priced them very aggressively. The MIAX exchange fees are now granted their introductory fees, but they're very low and very aggressive. We are still working with several market makers to tighten up the markets in the product. We haven't seen a lot of trading yet. Of course, we've only been listed for 8 trading days, and Vol's been pretty quiet the last few days. But the hope is, as market makers become more experienced with the product, the markets will tighten up. As we have more members join, we'll become more competitive with the VIX product, and we're very excited going forward.
So what has that response been like from the community? Because, putting a new product out there is one thing, but obviously getting firms on board. You mentioned the market makers. I think I saw Citadel listed. Have you some other market makers lined up? Who are the primary market makers right now, and what has their response been to the product? Are they excited to maybe have something new to sink their teeth into in the vol space?
They seem to be excited. We have 3 market makers quoting it right now, with a couple more waiting in the wings. I don't know if I'm at liberty to mention who they are. It's public knowledge that our PLMM, our specialist in the product, is Citadel Securities. They've been very helpful through the launch. And they're still in test mode themselves. As the world knows, we don't currently have a future on spikes. We're working on that and hope to have one up by mid-year. So they're still working on their hedging program, the cross-hedge between spikes and VIX. And as they get more experience with that, we expect they're going to tighten up their markets. The other 2 markets that are quoting, the other 2 market makers that are quoting here now are basically saying the same thing. We need to see some volume. I have a little bit of a chicken or an egg problem. They want to see some trades and some positions. They watch their systems hedge, but with wide markets, you're not going to get a lot of trades. So we're fighting this a little bit of a headwind, both not having the future and it's waiting for the markets to tighten up some.
Yeah, it seems like there's always that chicken and the egg when a new product launches, right? Some more market makers, they always wait to jump in until they see volume, but you're not going to see volume until they jump in to tighten the markets, right? So it's always that weird dance at the beginning in the new days of a new product. We try to incentivize some people to dive in a little bit first to help get those contracts going. But obviously, outside from that, those are kind of some of the general growing pains you're going to see whenever you launch a new product, let alone something esoteric in the vol space, which always requires a little bit more. I think people take some time to get acquainted with it. But outside of those growing pains, how has the first week or so gone? Have you guys been happy with how things are progressing out there?
Very happy. And everything's been very smooth. And we've only done a few dozen trades. Open interest is still relatively small. I believe it's a few hundred contracts, 261 to be exact. But the cash is tracking very much as we expected. The long-term correlation between the 2 products is about 99.98%. We continue to see that on a day-to-day basis. I think maybe another thing firms are waiting for is they want to see our first expiration cycle. They want to see a settlement take place. But there's also some growing pains. And we've had customers call us and say, I've called firm ABC and trying to enter an order, and they don't support spikes yet. We can see when the orders come in which firms are and are not. I'd rather not call out any retail firms specifically, but we have been in contact with all the retail firms. Some of them have some risk protections they still need to build internally. Some of them want to see a little more volume, but they've all said they'll be here as the product grows.
Yeah, I think we have some listener questions about that ourselves here. So people are genuinely trying to get at the product out there, Shelly. So that's a good sign. There's demand there for it. Let's walk it back a little bit because we were talking about some of the mechanics of spikes. People listening to the show for a while, they have a pretty strong baseline for VIX and kind of the VIX cash and what it represents. They know, we're around a 14 and change right now. They know if it gets much lower than that, that's getting into low levels. If it spikes up into past the 20s, into the 30s, certainly into the 40s. That's extremely elevated. And they know beyond that, maybe some rare spikes into the 80s and things, but those are crazy town periods. Right now, spikes itself is hovering right around the same level, right about 1420 or so. Should our listeners, should they look at those levels in a similar frame of reference to how they treat a VIX, where, into the single digits, the high single digits, that's relatively low. If it gets up into a 20s and beyond, we're starting to see some elevated levels. Was that kind of done by design to kind of ease the adjustment to the new product, or is there a different maybe frame of reference they should be looking at spikes with?
It wasn't necessarily done by design. I guess one of the things I want to do is thank you for when you mentioned a move up in VIX that you refer to it as spikes in VIX. We appreciate that.
It's kind of hard to avoid that one, right? So well done on the naming convention in that regard.
Yes, it is. The reality is because we base it on SPY, and SPY and SPX are so highly correlated. Of course, the SPY is the ETF of the S&P 500 index. The SPX is the S&P 500 index itself. The options are very highly correlated. The prices of those options are very highly correlated. Those two indexes track virtually, move for move. So the fact that we're using the SPY options, the volatility of SPY options will be very similar to the volatility in the SPX options. While they're not fungible assets, they're virtually fungible. So the fact is the spike and the VIX will always be priced very closely to one another. At the moment, the VIX is 1403. The spike is 14.15. If you look at the 52-week high-low, we started publishing the spike index in April, so this only goes back to April for spike, and I'm looking at numbers back to February or March 1st, I guess, for VIX. But the 52-week low in VIX is 1052. The low in spike is 1115. The 52-week high in VIX is 3620. The 52-week high in spike is 3584. So you can see that they're very close together. When the VIX spikes will also spike. You should expect to see those move very closely together again, because the SPY and the SPX move, they're mirrors of each other.
Well, I think that'll certainly ease our audience's introduction to the product as well. If they had to learn an entirely new frame of reference, an entirely new nomenclature, it might hinder them a little bit. So something that is in a similar ballpark frame of reference-wise, I think they can wrap their heads around that a little bit easier. And it certainly seems like I said, it's still early days. You're still waiting for things to kind of tighten up and do everything. But it does seem like the early use case is similar to what we're seeing in VIX, which is interest in the upside. I saw it looks like some May verticals going up to May 2025 for some decent size, actually, for a brand new product. I think 50-lot spreads and things going up. You don't see that in new products very often. So I think even though it's early days, it seems like the use case is getting out there, Shelly, that people are coming in and taking it and looking at it from a similar viewpoint to VIX, which I think in the early days is a good thing.
It is. We're very pleased with that. There's been some retail presence. There's been some institutional presence. We've seen a few thousand lots resting on the book. Not quite mid-market, but close. So people are putting their toes in the water to see how it works.
Yeah, we've been down this dance a few times with new volatility products launching in the space on this and other shows, and we've seen how long it takes to get any decent size flow really going in them. So as I have some decent verticals and things going up already in the first week, you're kind of ahead of the game there, Shelly. So well done. Whenever these products launch, these new products, things come to market, there's always maybe something strange, something unanticipated, a surprise, maybe good, maybe bad, you never know. You guys have now gone through this whole process. The product is live. Anything surprising you guys on the other end here? Anything like, wow, we never anticipated this when we first started planning this all these days ago?
The things we didn't anticipate were some of the brokers not being ready to support the product. That was a little bit disappointing. I think I have to point the finger at myself for not reaching out and being more aggressive with some of these firms. But overall, there's been no real surprises. I guess the only surprise along the way was the government shutdown and having to delay the launch 30 days. The other thing we knew going in, again, is we know we need a future. We're working on that, and that should help add additional liquidity as well.
Yeah, that's a question we've received a few times, so I kind of wanted to just reiterate that. So you have plans for that sometime in the next, it sounds like 6 months, something like that, you're working on that?
Yeah, we believe it'll be 6 months. The market makers are going to price in a bit of a risk premium because they'll likely be hedging with VIX futures, but that basis risk has proven over time to be very small. So I think they all seem to be pretty comfortable with that. But they want to go through a cycle or two, and like I said, they need to exercise their risk tools by making some trades. We want to get through an expiration cycle. I'll be anxious to see how things go after the March expiration.
So are we announcing here the launch of a forthcoming MIAX futures exchange here, Shelly? Breaking some news?
I think it's premature to break that type of news, but we do expect the product to be listed by mid-year, either on a new or existing exchange.
Well, yeah, if you want to go the SIBO, what you need to do is list it on CME. They'll really love that.
That'll motivate them. But you mentioned it's been kind of an interesting. You mentioned your data goes back to April when we started disseminating this. Obviously, a lot's gone on in the vol space in about the last year or so, almost exactly. We're in March now, so last February, of course, was a very tumultuous period in the vol space. It wiped out a lot of products in the volatility space. I'm curious from your guys' perspective, coming to the SEC now, post last February, post VIXXXB, Volatility, call it what you will, when a lot of these products got wiped out. How challenging was it to come to them? Were they receptive for a new vol product, or were they maybe a little reticent to approve a new vol product given everything that had happened last year?
That's a great question. And both the OCC and the SEC asked a lot of questions and were very concerned about bringing a new product to market, given some of the issues that we've seen over the last year in the existing product. The SEC was truly focused on what we are doing around the settlement to help ensure that the investing public is comfortable that the settlement price is a fair price and it's not able to be manipulated. We don't have a strong opinion one way or another on the lawsuits that have taken place involving the CBOE. I personally have an opinion that I think some of the people that are assuming there's manipulation because there's net buyers or net sellers of options at expiration don't truly understand how the markets work and how professionals unwind expiring positions. That being said, we went to the SEC with the existing auction process that we have on MIAX for opening options, which we will use in the spiders at expiration, with several enhancements built in for that one settlement day per month. And some of those enhancements were including bringing in the ability for members of other exchanges through linkage or through a very transparent auction process to see the imbalances that we may have at the opening. And if we have an imbalance that will force our price through the NBBO, make sure there's plenty of time for members and other exchanges to respond to those imbalance messages, making our imbalance messages and our depth of book available to anyone who wants to take our data feeds. We think that since that time, CBOE has done a wonderful job opening their auction up to more people. They've become more transparent. We think that's a big win for the industry. We think it's a big win for their product. We think it's a big win for the volatility complex in general. Again, we're about growing the volume in the space, not just about competition. So anything we can do to help foster changes, whether it be in risk protections, which we've done in the past, or in how the settlement works, is a positive for the industry. But there are some inherent differences in the product that we think are very important, and the SEC found very interesting in terms of how the settlement works. For example, the truncation methodology, how you pick which is the last option amongst the out-of-the-money calls and puts that are used in the calculation at settlement. The CBOE methodology is to use the last zero bid option. The spikes methodology is to use the last two options that are valued at a nickel or less. So if you have an option in SPX, a way out of the money puts, and somebody wants to act in a nefarious fashion and puts bids in a lot of these out of the money options, of course the SPX minimum bid ask spread is a nickel. They can just put nickel bids in a lot of these options and cause them to be included in the calculation. In spiders, which are 1/10 the size of the SPX, if you have an option that's relatively worthless, something that's worth a penny, and you want to try to make that option trade at a nickel on the opening, you'd have to buy, if not tens of thousands, perhaps hundreds of thousands of options to take a penny option in the front month spiders and move it to 5 cents. It's much, much more difficult to manipulate. And again, with our open structure, our open auction, our depth to book, if an option's no bid at 2 cents on 15 other options exchanges, and we have some large number to buy, the arbitrageurs will come in and offer those at 2 cents, certainly 3 cents if they're offered at 2 away, but most likely 2 cents here, and force that market back to be fair value before we would open. So it greatly reduces the probability of somebody trying to act in their own selfish best interest and try to manipulate the settlement.
Yeah, that's certainly an issue that a lot of people are concerned about these days. So smart to launch a new product with some of those safeguards built in. Well, like we said, we're happy to have a new product to talk about in the vol space, just for our own sanity here on the show. It makes us happy to have new products to talk about. We like talking about the full spectrum of volatility, but sometimes when it's just 1 or 2 products, you want to be able to mix it up a little bit. So we're very happy to be able to mix it up. We're happy that you guys at MIAX and indeed Spikes are going to be joining us. We will have Simon, like you mentioned, next week on the show. In fact, I do believe we're going to be bumping the show back a little bit. They are based over there in Sydney, and that the time frame's a little bit rough for them this time, so we're going to do them a favor, give them a chance to have a little bit extra hour of sleep or so in there, so we're going to push it back an hour. So next week, listeners, the show will be at 1 p.m. Central, 2 p.m. Eastern, so bookmark that going forward. I know a lot of you have gotten used to our noon time frame, but we want to be nice to our friends over there in Sydney as well. But let's keep on rolling. It's exciting times in the vol space. So let's get to it with a little bit of our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down the exciting, ever-changing, as you just saw, world of volatility. And in some regards, things are changing because there's new products, which is always fun. Like we mentioned at the top of the show, we got spikes to add into the mix now, which is fun. But on the other side, the levels of volatility haven't really changed since our last show 2 weeks ago. In fact, when we were first analyzing everything for the show this morning, it seems like we could just copy the notes from 2 weeks ago and put them in because most of the levels are almost exactly the same. They've come off a little bit now during showtime, but coming into showtime, we were pushing around a 1475 and everything in the VIX cash and in the spikes. They both have come down now. They're both at about a 1415 or so right now in the cash. The VVIX, the volatility of volatility, was at about an 80. That's also unched from where we were. So those are both almost exactly unched from where we were 2 weeks ago. Seeing a little bit of juice out there in the futures in terms of, but not a ton out there in terms of changing. So not a lot has really changed. Mr. Mark, sir, it's been a couple of weeks since we've had a chance to sit down and talk some volatility. What's been catching your eye out here over these past couple of weeks and indeed coming into today?
Yeah, we finally saw some volume pickup kind of Friday-ish, right before VIX had kind of that weird, mysterious move. I mean, we basically have done nothing for a couple weeks, and yet here we are, and volatility, the VIX is 15, and we've had a realized volatility of what, 3, something like that. It's been pretty fascinating the way everything has kind of come together from that perspective.
Anything surprising? I know the last couple of shows we were talking about how flat the futures term structure was. It's not that flat anymore, but it's anything surprising you out there?
I think we're starting to see term structure kind of widen out a little bit. It's starting to be less, with kind of today's move, it's starting to widen out. But, you can see that, there's a change in sentiment on kind of what's going on based on the way volatility has moved. There doesn't seem to be a lot of implicit long-term fear left in the market right now. and there does not seem to be a lot of, I don't know, there just doesn't seem to be a lot of terror anywhere. And so, yeah, I mean, I think 15 is going to act like 20 for the time being. There's just some cheap places where there's premium floating around, and there doesn't seem to be a lot of risk. There's a decent risk appetite right now. People don't seem to be overly afraid of anything. And so that's why when we got to 15, you started to see term structure flatten up, where, 15 before had been kind of the where things would actually, be considered widening, and that would be a bottom. So that's what I think is kind of interesting, the way that has moved around.
And Shelly or Joe, same question to you. Obviously, you guys have launched a new vol product since the last time we did a show here, so a lot has gone on, and it's still, obviously, like we mentioned, kind of early days. We have seen some volume going up on the product, though. Maybe any interesting developments you've seen in spikes over the past couple of weeks? Any interesting, trends you've noticed in things as you mentioned it's kind of a quiet time in the vol space to be launching a product. That could actually be good because it gives you a chance to, if you launched it into the tumult of, let's say, last February, maybe that wouldn't be the best thing. But anything kind of catching your eye over this week and change now that it's been live and active? Maybe any interesting developments or things that maybe you thought were intriguing and worthy of note to our audience?
I don't really have a lot to add in that vein, Mark. And I certainly watch what's going on in our order book just because I'm interested. I don't watch the market as closely as I used to when I was traded. So I don't have a lot of comment on what vol has done in the last 2 weeks. Certainly, I'm pleased that we launched into a relatively quiet time, because if there were any problems, I would hate to see anyone be at risk because of those problems. But it's been quiet, it's been smooth. Like I said, we have seen some tease orders come in, institutional orders that haven't traded yet. But I don't have anything really strong to add what was already said.
Yeah, it's still early days out there, so I'm looking forward to the days where we can sink our teeth into some more data, break down some of the interesting top spikes positions, compare and contrast it to what's going on in VIX, because that's what we like to do here at the end of the day on the show. It's what our audience likes. They like to see how things are trading. They like to see what's going on. They like to analyze between different products. That's always an exciting thing for them, too. So we're looking forward to all that. Let's looking at what's lighting up here in the realm of old school VIX options here. ADV, again, that's almost unched from where we were 2 weeks ago as well. Shy of 500,000 contracts, 476,000. Hasn't been exactly the most rock'em sock'em robots period in volatility. Probably a good time to take a week off last week, actually. So well-timed from a holiday perspective out here. Let's break down, as we are wont to do here, what people have been up to, what some of the big positions are out here, at least in terms of some of the mothership VIX options. Let's start at number 10, March 40s, 166,000 contracts open there. Number 9, March 22s, about 172,000. Number 8, March 15 puts, first put on the list, 175,000 contracts there. Number 7, the March 30s, the 30 strike, always popular across the board. I'll be curious to see once Spikes gets up and running to see if there's some love for the 30 strike out there as well, because it persists in VIX and it kind of befuddles me. March 30s, 176,000 open there. Number 6, April 26s. 201,000 contracts. Number 5, May 37 halves, about 215 on the tape. Number 4, April 30s, 217,000 contracts. Number 3, April 45s, 226,000. Number 2, the April 20s, 236,000. Number 1 out there, the 20s, popular. In the March 20s, number 1, 260,000, just a little bit north of 250,000 contracts out there. Mark, we were talking before about some upside verticals going up in spikes. I think it was the May 2025. It seems like that's kind of thematic in the vol space right now. You and I were talking earlier this week about what's going up in VIX as well, and it seems to be similar bias. People looking for ways to get upside exposure, either through straight up verticals or maybe financing those verticals with puts. Is that the lion's share of what you saw this week?
Yeah, there were some pretty darn huge short put with long call spreads that traded. That was Friday that was on Thursday of last week that those traded for some size. and that's been kind of the big trade that we've seen over the last few days and weeks was just that trade. Have not seen a lot more beyond that, unfortunately. I'd like to see us get some more movement, but there just doesn't seem to be a lot going on right now.
Are you a fan of that setup right now, the financing verticals with some short puts or put spreads?
I get it. I think with VVIX, and by the way, are you guys going to come up with like a VVIX version for spikes so that we are able to, keep an eye on overall implied volatility? Because one thing I pay attention to is where is VVIX trading, because when VVIX is, when VVIX is low, rather than selling premium, I like setting up hedges by, buying stuff. And that is kind of where I'm at right now, is that vol's so low, I kind of want to buy stuff.
It might be a good question for Simon when he comes on next week. But Shelly, is that in the works, maybe to disseminate a vol index like they do for VIX with spikes?
It is in the works. I'm hoping to have that up by early April. Haven't determined what the ticker symbol is going to be yet, but we will begin to disseminate that.
I think it should be V spikes, don't you?
V spikes would be a logical choice. Just a matter of choosing. Like I said, we just need to pick the symbol. Calculation's already starting this month, but it's a matter of getting the symbol and beginning to disseminate it. You can certainly see the calculation done by some vendors. The vendor we use happens to be the CBOE product, CBOE Live Vol.
Yeah.
Has our as the vol of the front month March options at 76.43 right now on Spike.
Yeah, so there you go. Maybe we'll name the product for him here on the show, Mark. What do you think? We'll lend
I like it.
Our branding expertise. V-Spikes. Went out on a limb with that one, did you, sir? But I like it. I like what you're selling over there. But yeah, the more data, the merrier. Of our audience, the more data they have to sink their teeth into, the more things they can compare and contrast between different products, the happier they are. So we'll be looking forward to when that launches. But you're right, it has been kind of a weird, kind of quiet time out there in the big mothership VIX options. Let's see if the same is the case, Mr. Meatball, for our old friend. Talk about naming. This is still a much maligned name in the vol space, and I believe rightfully so. Our old friend, formerly known as VXX, now VXXB. I still can't say that with a straight face. It doesn't roll off the tongue at all. At about 30.5 right now, so it's come off about another point since we started looking at it here earlier this morning. So yeah, just imagine. I said this to the Rock Lobster when he was on a couple of weeks ago, Mark. But just imagine how many happy faces there would have been in our audience if we were at these levels. Let's say, back around Jan expiration or so.
Oh yeah, I know. It's amazing. But yeah, I mean, I feel like we're. It's going to be interesting over the next few months. What I think we're going to see with VIX futures is that with SPXY kind of neutered and XIV done, you're going to see that the volatility space is, futures are wider and they're more, and there's a steeper curvature. I think that you're going to see that we had talked about how the curve had been kind of flat, but that's when we're getting kind of some upside pressure. I think you're going to see the VIX curve basically flatten up, steepen up over the next few days, weeks, and months, because premium is just there's nobody to really tighten up that premium except for the different funds themselves.
Well, let's see if our audience persists in wagering on VXX erosion. They've continued to tilt to that windmill, even though it hasn't worked out for them too well in the last couple of expirations for VXXB, Mark. Let's see if this continues here. Look at the top 10 positions here in VXXB. Number 10, the June 40s, about 16,600. Number 9, the March. These are the weeklies expiring on the 1st, 39s. So it's a lot of upside here, which is interesting. 17,000 there. Maybe they are changing the tune a little bit, Mark. Number 8, the June 75s. There we go. That's some upside. 17,000 of those as well. That's optimistic, shall we say. Number 7 here, the March 44 calls. These are expiring on the 22nd, the 44 calls. And then number 6, the March 41 calls, also expiring on the 22nd, 18,500 and 24,000 of those respectively. Maybe a bit of a vertical going up there because they're both in the same expiration cycle off the monthly there. Number 5, the March 70s, some more love for the 70s, 25,500 of those. Number 4, are another put here. There are not many puts, which is interesting. March 29 put, about 25, almost 26,000 of those. Number 3, the March 43s, 28,500. Number 2, the March 45s, 31, almost 32,000. Number 1, Mark, we got to go all the way out to number 1 to find our put, but there is still put love, and that 30 strike persists. These are March expiring on the 1st, so today, 30 puts, 46,000 and change. So it looks like, Mark, we're going to have more people biting their nails going into expiration today. They persist on that 30 put strike. They love it.
Yeah, it's pretty amazing how popular that strike continues to be. But that's been an active one. There's been, really the volume is starting to finally pick up in this product. Although, again, it just doesn't have the exact same. It just, with all the other products gone, it does not have the same. It doesn't have the same use case and number of users as it used to. So I don't know that we'll ever see it, the same kind of open interest that old VXX had, but definitely a lot of the same games being played on VXXB.
I got the feeling a lot more heartbroken people today. It doesn't look like we're going to break that. The 30 could break. That could happen.
It threatened earlier in the week. We were sub 30 on Monday or Tuesday, right before things started to kind of back off, and since have not been able to really get any pressure. Although I if you had to put with where we're trading right now, I would be less than surprised if those ended up being worth 20 cents.
Yeah, it wouldn't shock me. It'd make me happy to finally see someone make some money on the 30 strike for a change, so they could keep going, because every month after month they keep blowing out like this. That's not a long-term viable thing for the volatility space to have a large swath of your OI breaking up. Yeah, go ahead, Shelly.
Yeah, I just want to add, as far as volume in VXXB, I think you're going to see a pickup going forward as the VXXB is eventually added to the penny pilot program.
That'll help.
When VXX came off, it was in the penny pilot. There are certain rules in place that prevent the exchanges from adding it to the pilot immediately. That will be addressed. We're working with the commission to change that. And once this trades in pennies, I think you'll start seeing the volume continue to pick up again in VXXB, similar to what it was in VXX.
Can I ask a quick question? You're an exchange
Sure.
guy. Why do we still call this a pilot program when it's been, 9 years, something like that?
No, it's as old as we are. It's over 12 years old now.
Yeah, right. We launched with penny pilots. Why is it still called penny pilots?
Well, first, let me clarify. Few things are as old as I am, but that being said, it is technically still in a pilot program. There are proposals out there from all the exchanges to make it permanent, and part of the alignment of the rules that's being done to make it a permanent program put out a methodology for when a class is no longer in the pilot, they get replaced every year. I believe it's in July. And that's what held us up from being able to make the VXXB a penny class. It was an oversight when the exchanges were writing the rules to change the penny pilot to be a permanent program, and that is being addressed. So you will see two things happen in the near future. One is VXXB being added, changing the rules so VXXB can be in the pilot, and two, the pilot will become a permanent program.
that will please our listeners. I've lost track on how many people have written in.
Penny permanence?
Penny permanence.
That's preposterous.
The penny permanence.
I call it the penny permanent program.
The penny permanence pilot.
Penny permanent program.
The penny permanence pilot. I like that. But that will please a lot of our listeners. We've had a bunch write in, Shelly, saying, hey, ever since I went to VXXB, it's wider. What's the deal? What's the deal? So we have a lot of savvy listeners out there, and they'll be pleased to hear that because they've been hitting us up. I've been telling them I don't make the rules. I don't make it penny tight. I can't change it for you. But they've been hitting us up nonetheless. So I think they'll be happy to hear that. Even though the ongoing permanence of the quote unquote penny pilot, it is a funny thing. Yeah, we launched Options Insider in January of 2007, and Penny Pilot I think launched officially within a couple of weeks after that. So it is pretty much a dozen or so years old now. So it's a long in the tooth pilot at this point. But c'est la vie. I know the SEC has their terminology. They are loath to change. And I think some people don't want to change away from pilots because then that makes it sound like they can't change it. So I think that once they take it off pilot, then it's permanent. And then it's really scary for people. So there's a lot to be scared about with people. Let's do a real quick run through. We are kind of at the tail end of earnings season. There has been some earnings volatility to look at out there, even though it's kind of a bit of a quieter week. Towards the end of this week, we had some names popping off. We had Fitbit, we had Square, we had some other names making some news this week. Let's see, Home Depot was earlier this week. Macy's, Funko after the bell yesterday for all those who love their pop vinyls. Out there. Of course, if you guys want to see all the earnings volatility breakdowns, the straddle analysis, the moves, the predicting, all that stuff, head on over to theoptionsinsider.com. You can find the earnings move and earnings move results reports provided for us by our friends over there at ORATS. They do a great job. It's great free data. You're foolish if you don't take advantage of it. I'm just scrolling through some of these now to see some interesting names that just came off. Hewlett-Packard. They're in the report here from the 28th. They reported on the 27th. They went into their earnings right about $23.85. They were pricing in a straddle of a little bit north of $1, about 107, and they ended up delivering. And this is in the immediate blush of the report. This doesn't cover, obviously, the days afterward. This is just going into the open. They sold off pretty hard, almost 4x their straddle, off about nearly $4 in that initial blush, down to about $20. So they outperformed their straddle dramatically to the downside, in perhaps the wrong direction if you're a Hewlett-Packard bull out there. We also saw some other name. JD is a name we've been talking about a lot. It's been lighting up our unusual activity a lot. It's that Chinese e-commerce name. They reported on the 28th before the bell. They went into their earnings right about $26. They were pricing in a straddle of about $1.61, and they ended up doing a heck of a lot of nothing. They delivered about $1.40, almost exactly in line with their straddle. So for all the unusual activity they've been generating of late, it wasn't in the straddle department where they knocked it out of the park by any means. Let's see, earlier in the week here we had Home Depot. They went into their earnings $192.40. They were pricing in about $4, $4.11 on their straddle. And let's see, I don't have their move results report for them, so I don't have exactly how much they move, but you can find all that at the Options Insider. There's dozens, if not hundreds of tickers here that they profiled for you. And again, it's all free, so take advantage of it. A lot of you, even though we counsel you against it, a lot of you love to trade in and around earnings, or just at the very least keep abreast of what's going on. So, and a lot of you have hit us up for years about where can we get great straddle data around earnings. Here it is. It's all done for you. It's all completely free. It compares this quarter to last year, all this other stuff. It's more data than you could possibly use. Check it out for yourself over there, theoptionsinsider.com. All right, let's get to some of the listeners. They're chomping at the bit with a little bit of their volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol Voicemail, the portion of the show where you guys take the reins, questions and comments. A lot of them coming in this refrain. You mentioned a few of these, Shelly. We'll put one up here. We got a bunch like this from J-Sign. He wants to know, is Spikes live? I can't find it on my broker screen. And he wants to know the ticker. So first off, it's good. We're seeing interest in the product. I think this refers to what you were talking about earlier, Shelly, with some of the brokers maybe slow on the uptake for new products. But maybe refresh them. I guess we didn't do it at the top of the show. We probably should refresh them. What the heck is the ticker? It's pretty straightforward. And then B, hopefully when they'll be able to see it. He doesn't mention what broker he has, so we can't call them out. But when we'll hopefully be able to see it on most of the major brokerage platforms.
Hey, Mark, this is Joe. Spikes is in fact live. I think we've established that. The ticker is SPIKE, and we are working with all of the retail brokers to get it live on their platforms. Shelly mentioned some of the hesitation around some of their risk settings that they're still working out, but they have been very engaged in this process for at least the last 8 to 12 months and very interested in educational opportunities with us to help with their end users. And we've been working very closely with them on podcasts and different kinds of things like that. So for sure, it's up and running. It's just a matter of time before they make it available.
All right, so we're looking forward to it. To let us know if your brokers still don't have it soon, listeners, and we'll twist them a little bit. We'll put them on blast here on the show to maybe speed up the process of getting it. Because at the end of the day, we want to be able to trade all the products on all the platforms, right? So hopefully all you who wrote in with a similar question, it'll be resolved shortly. If not, let us know. We want to hear about that. Let's see here. VEX, another product, another question on a similar vein here. Good to have you guys on the show because you guys can actually answer this one for us. VEX1 wants to know, why does it take so long for new volatility products to come to market? I can see why they would have this question. We've had a lot of people on this show over the years coming here and announcing that they're working to launch new volatility products. As I mentioned at the top of the show, we can probably count on one hand, if not a couple of fingers, how many of those products actually made it to the marketplace. So you guys are in somewhat rarefied company. I don't know, Joe, Shelly, whoever wants to take this one for our listener, Mr. VEX1 here. Why does it take so long, Shelly?
The answer is that the people launching these are really lazy and they don't try hard, so they just take their time and dilly-dally, and and it's basically all their fault, and it has nothing to do with the complexity of the space.
That's what it is. Yes,
that was a joke. That was a joke.
Yeah, Joe and I first looked at each other and said, "What's he saying?" It is a complicated space. And one of the things that we've always believed in at the MIAX exchanges is if we're going to bring something to market, it should add value to the marketplace. So we brought value to the marketplace with our technology with MIAX options, bringing that technology and risk protections into the marketplace when we launched Pearl just over 2 years ago. One of the things we didn't talk about today, this is a big day for us because we launched our third options exchange, MIAX Emerald. Again, bringing our technology and risk protections into a different type of market model.
That's right. That's today. We got so caught up in spikes, we forgot to even mention that.
That's okay.
Congratulations,
it hasn't skipped our mind.
I guess that's a good thing.
It is a good thing. We only launched with one stock today. We're trading options in IBM. It's been successful given it's just the first day.
Mark, you don't know anything about trading IBM, do you?
I started in IBM. I'm more of an Intel guy, but I did dip my toes into IBM back in the day, yes.
Yeah, we're actually, of the 16 exchanges, we're in a dead heat for 12th in terms of volume. Again, first day, just a couple of market makers, not a lot of orders, but we're 1.25% of the IBM volume today, and we're going to add probably half a dozen stocks next Friday, including SPY. So we're excited about that product. That being said, bringing anything new to the market is a cumbersome process. You have to deal from a technology perspective. For us to list spikes on MIAX, again, one of the things we pride ourselves on is our risk protections. And a lot of those risk protections are based on NBBO protections. With a single list product, you don't have those protections. So we had to change and modify some of our risk protections, which are, you have to design the change, you have to write the requirements documents, you have to code it, you have to test it, you have to convince the SEC it's good, you have to get it in the rules that they can understand and the public can understand. So that's a process in and of itself. To have a product that brings value to the marketplace. Again, we believe the settlement methodology in spikes is better than what's in VIX. The pricing methodology using the last trade as opposed to the midpoint of the bid-ask spread. One of the things we didn't talk about earlier is the cash calculation. I know the futures tend to lead the market, but those futures are priced off the cash. The sophisticated traders are calculating their own cash calculation. The CBOE publishes the VIX cash once every 15 seconds. All of your users can bring up the spike value. It is recalculated every 100 milliseconds. It's far more dynamic. You'll see that the cash calculation actually is leading the futures. So it's another advantage for your listeners. But the difficulty, the biggest difficulty in bringing a product to market is, one, is it better? Is it different enough? Is there going to be interest in trading it? Two, getting it through the SEC. They do a great job vetting new products. The process was very complicated with them. It was part educational project and part explaining why we're different, but why what we're doing different is better for the public. There's working with the OCC. They have to be able to measure and monitor the risk of the members and helping them become comfortable with the product. There's so many moving parts. It literally, from the time we decided to move ahead with Simon and T3, it took us 18 months to bring the product to market.
A lot of people sometimes just think, you snap your fingers, you call up the SEC, you got a new product next week. And unfortunately, as we've seen on this show over the years, it's a lot more of a drawn-out, difficult process than that. Speaking of difficult, Mark, we made our lives more difficult now that we got the Spikes folks on. So now we have to predict two things in the crystal ball, not just one. So let's keep on rolling with our final segment. It is time to go into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the most dangerous, the most difficult portion of the show each week, where we attempt, usually what we used to do is just attempt to wrestle down that slippery pig known as the VIX cash and try to guess what that's going to be at this time next week, the end of the show. Now we're talking MIAX. We're going to add that into the mix because it's not hard enough to do one. Let's do two. Why not? So coming into the end of showtime here, we're seeing spikes hovering right about 1403 or so. VIX cash a little bit shy of that, about 1390 or so. So they are pretty much in lockstep, which is handy for our purposes because if you can kind of prognosticate one level, and I still don't have a full, I haven't been prognosticating spikes for a while, so I'll have to do that to build up a bit of a database, but it's not like it's 100 points removed from a VIX or anything like that, so that should make it easy. So tell you what, since you guys are our guests, it's your first time on, I'll give you guys the chance to choose how you want to go, Shelly. Do you want to go first, predicting spikes and or VIX, or do you want me or Mark to go?
My personal opinion is I think it's completely inappropriate for us being an exchange to try to predict where the market's going to be. And besides, if I was any good at picking where the market was going to be, I would not be working for an exchange.
I had a feeling you might say that, but I wanted you to get it out there just in case. I didn't want you to feel left out. So you can enjoy Mark and I making fools of ourselves instead, which the audience certainly does. Mark, I'll go first. I'll make your life easy. Let's see. We're about a 1390 here in the VIX cash. Spikes a little bit right around the 14 handle even. I can't say I don't feel. Usually I come into this segment, I have a decent handle for where I think we're going to be this time next week. This week, maybe because we've been off for a week, my radar feels a little bit askew. So I'm going to say, we've been drifting in this 13 handle and change for a while, getting up over 14 again, threatening 15 for a while. I think we're going to be somewhere in this level range next, maybe a little bit higher. Maybe something might conspire to get us a little bit north again. So I'm going to say 14.5 in that range for both, for spikes and for VIX cash. All right, Mr. Meatball, you're now free to pick 12 and a quarter or whatever you're feeling on the downside.
Well, let me say, I think that I almost hit the nail on the head from the one 2 weeks ago.
Oh, from 2 weeks ago? From 2 weeks ago?
I think I almost did.
We weren't picking from 2 weeks out, but you might be correct.
Saying.
You might have. I think you were around 14. What were you at? What were you at? I forgot.
I think like 14.05 or something like that. I don't exactly remember.
So sure, yeah, I'll extend it for a week and give it to you.
The nice thing I'll say, Spike Boys, is that or my guys from MIAX is the memory of how many you've won and what your actual prediction is fleeting. So it doesn't end up haunting you the way you might expect.
Won't come back to after you for years.
Yes, exactly. They'll just say, what's wrong with you? But I'll tell you, I think that this next week is an up week. We had kind of that weird little up vol tick, kind of senseless tick, up vol tick. I think we're looking at 13.05.
That's your uptick?
I think market uptick, down tick in implied volatility. I'm going to say 13.05 and maybe maybe, and if I'm wrong, it's probably because it's too high.
There you go. I was going to say, wait a minute, that's unlike you not to fade volatility whenever possible. There you go, listeners. 14.5 for me on the upside. Mr. Meatball there at about a 13.05 on the downside. So nice, about roughly 1.5 spread for you guys to come in between. Unfortunately, that music means we've come to the end of an exciting new episode here in the world of volatility views. We like new products in the vol space. It's a good thing. It's a good thing for everybody to have something new to sink their teeth into. So we're looking forward to doing just that. Remember, going to be a new time next week. We're beaming in Simon from across the pond, so he needs a little extra hour to get his beauty sleep. We don't hold it against him. So it'll be 1 o'clock Central, 2 p.m. Eastern next week. Make sure you keep that in mind for everyone who has our usual live stream time down at noon Central. But before we go, let's go back around the horn. Let's start with our guests, Shelly and Joe. There, you guys are the bells of the volatility ball this week. Anything you want to leave our listeners with? Maybe where they should go if they want to learn more about spikes, or who they should maybe contact if they want to get their broker up and at them trading this thing.
Sure. So all the information about spikes, including the calculation methodology, all the statistics, and anything else you want to know about spikes is available on our website. That's MIAXoptions.com. Just click on the link spikes. If you have questions, you can send an email to sales@MIAXoptions.com. And if you're having trouble with your broker listing spikes or having it available for you to trade, also send an email to sales@MIAXoptions.com. Joe and I and our team all get that mail, and we're happy to follow up with the individual firms on your behalf, because it's certainly in all of our best interest to have it available for you.
We agree.
There you go. So who was it? Oh, Jay Sign, the listener who wrote in, all the others who wrote in with that same kind of question. Hit them up, sales over there at MIAXoptions.com, and they will act on your behalf to get out there and to get your broker on board, because you want to be able to trade this thing, right? So that's a good thing. And Mr. Sebastian, sir, if people want to learn more about the volatility space, maybe attend a webinar, perhaps even a masterclass, where should they go? What should they do, sir?
Yeah, go to optionpit.com/masterRIA. We're going to be doing a 10-part course on using options as a professional. And by that, I mean a registered investment advisor or a money manager. I believe we're days away from getting approved for continuing ed credits for certified financial planners. So if you're a CFP who's interested in learning about options, and hey, you need that continuing ed credit anyway, come up and see us at Option Pit, and we'll help you get that CE credit.
There you go. Get your credit over there, optionpit.com. to learn more. On behalf of myself and Mr. Sebastian and our friends over there at MIAX, Shelly and Joe, we're looking forward to all the good stuff coming out of Spikes in the weeks to come. And indeed myself, I want to thank all of you for downloading, streaming, subscribing, for sending in your questions, for listening to the live stream, all the stuff you do. We love you guys. Keep it coming, and we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.